Welcome to another S&P 500 analysis. The Fed decided to pause on the hiking of the rate for June, but J Powell said there will be 2 more 25 basis point hike for 2023. But the market doesn't seem to believe it, so it parties on. So how long and how high could this rally go? We'll try to answer this question by looking at the price action of the S&P 500, the other major market indexes, the sentiment, market internals, 10-year yield, US dollar, oil, silver, and gold, and see what they are telling us. Stay tuned. Looking at this weekly chart of the S&P 500, we see the range for last week was 144 points. And it gained 110 points or 2.58%. And it took out last August high and also had been up 5 consecutive weeks. It closed above the 10-week and the 40-week moving average. And it is continuing the weekly one-time framing up. And for the indexes, the performance for last week, the Dow Jones Transportation was the top performer with a 3.86% gain, almost gained 550 points. The Russell 2000 was the worst performer of the week. It only gained about 0.52% or 9.76 points. And for the month to date, the Dow Jones Transportation is the top performer with Russell 2000 move up to second place. The Dow Jones Industrial is the worst performer month to date, and the NASDAQ 100 and S&P 500 or near the bottom of the list as well. The NASDAQ 100 continued to expand its gain, and it is still at the top of the list year to date with a gain of almost 38%. The S&P 500 gained 15%, the Russell 2000 6.5%, and the Dow Jones Industrial is at last place with a gain of 3.48%. And looking at the 11th sector in the S&P 500, we see the technology sector is still leading the pack year to date with a gain of almost 39%. And the energy is the worst performer with a loss of 7.5%. Financial, healthcare, and energy is at the bottom of the list, and they are all with a loss for the year to date. And looking at the sentiment chart here, we see the VIX is sitting at 13.54 and the put-call ratio is at 0.65. So the market participants are bullish. And for the New York Stock Exchange, the up-down volume ratio is showing some buy-side strength, and the daily advanced decline also showing some bullish bias. And the new high, new low continue to outnumber the new low and is holding steady. The cumulative AD line is coming up, so we're going to be watching it to see will it come up and resolve that negative divergence by taking out this high here. The NASDAQ up-down volume ratio is showing some buying pressure, but for the daily advanced decline, it is showing neutral because on the up day, we see broad market participation on the upside, and on the down day, we also see a little bit of a broad market participation on the downside. For the NASDAQ market, the new high expanded a little bit. There were over 200 stock making new 52-week high on Friday, so the new high is still outnumbered the new low. The cumulative AD line is still showing a strong negative divergence between the AD line and the NASDAQ 100. And looking at the 10-year yield, we're still seeing the 10-year yield holding fairly steady around this 3.75% level. And the US dollar seems like it is coming down to test this 101 and $100 level here. So we'll be keeping an eye on it to see as the US dollar continue to retreat back down toward this 101 area. And we see oil is bouncing off this composite value area low. So we'll be still looking for oil to see will it get back up to this 78.50 area here near the composite point of control. And silver is still chopping around within this balance area between 23.50 and 25. Gold is trying to hold this trend line here, this supporting trend line. It broke through it for a couple of days, but it bounced right back. So right now, it's still trying to break out of this Fibonacci retracement zone. Now let's take a look at the indexes, starting with the S&P 500. We see the S&P 500 been up 5 consecutive weeks. And last week, it had a bullish weekly candle. Then on the daily chart here, we see on Friday, it finished with a bearish candle after 4 consecutive updates. And on this 60-minute chart, we're basically looking for the S&P 500 to pull back and possibly come down to this trend line and see would it come in to this lower range of the expected move between 4362.10 and 4352.50. Now on the downside, if it breaks below this lower range, then we're basically looking at this 4325.28. And on the upside, we are looking for it to push up to this 4512.94. If it could hold above this area here at 4325.28. Now watch this upper range of the expected move between 4472.50 and 4457.10. And for the NASDAQ 100, it also had a wide body bullish candle last week on a weekly basis, and also it tagged the March 2022 high. And in addition, it also filled this April 2022 gap here. And last Friday, it finished with a bearish candle here. So right now, we're basically looking for a possible pullback after 6 consecutive days with a bearish finish last week on Friday. So on the 60-minute chart, we're looking for a pullback and possibly back to this trend line here. And then if it breaks this trend line, we'd be looking at the lower range of the expected move between 14,824 and 14,780. And also, we are looking to see would it be able to hold their support level at 14,787. If that is unable to provide any sort of support, then we'd be looking at the possibility of tracing down to this lower level here for potential support at 13,880. And for the upside, we are looking for a potential target somewhere up here at the 16,000 level. And that would be after a successful back test of this support level at 14,787. For the Russell 2000, we saw it printed a weekly shooting star type of candle with a small bullish body here. And we're going to be watching the Russell 2000 and see would it be able to move up here to this 1925 level. So if we get rejected from this 1925 level, then we'd be targeting this support area here near the 1816 level as first level of potential support. And that doesn't hold support, then we'd be looking for a move possibly back down to this lower pivot here at 1697. Now for the upside, if it could move above this 1925 level, then we'd be targeting this level up here at 2028. And also on this hourly chart, we see there is a head and shoulder type of pattern here. So if it breaks below this 1860 level, then we'd be targeting this 1816 area here, this level for a short term down to this 1816 level. And the Dow Jones Transportation had a weekly bullish candle that broke above the resistance level at 14,637. It ended the week with a bearish candle, so we're looking for a possible back test to this 14,637 to see what it holds support here and get a bounce back up. And if it does, then we're looking for this 15,321 as a potential resistance or potential target on the upside. Now, if it breaks below this 14,637, then we'd be looking at a possible retracement down to this lower pivot here near the 13,461. Looking at the Dow Jones Industrial, we see that it finished with a weekly bullish candle here, and it broke above this potential wedge and also testing this possible resistance level at 34,299 area. So if it could stay above this 24,299 level, then we are looking for a possible move up to this 35,514. But if it fails to hold this 34,299, then we'll be looking for it to come back into this wedge and possibly break on the downside and then move down here to this 32,567. And for the New York Stock Exchange Composite Index, we see that there is a weekly bullish candle and it moved above the April high here, this April pivot high. And we see that it finished with a shooting star type of candle on Friday. So we're going to be looking for a possible pullback and possibly come back down to this 15,710 and see could it find support here. And if it could bounce off this level, then we'd be looking for the upside target somewhere near 15,969. But if it breaks this support, unable to hold this 15,710, then we are looking for it to come down to this 15,441 area. All right, let's take a look at the ETF for the indexes, starting with the Diamond, the ETF for the Dow Jones Industrial. On this daily chart here, we see there is this bearish candle on Friday, sitting just right above this, below this 343.28. So this would be the level to keep an eye on for the coming week. So if we fail this back test, then we look for a move down to this lower range, which would be between 339.50 and 338.80. So we'd be looking for a price to come down here to somewhere around this 338.79 to see would it be able to find support and bounce back up. Now, if it doesn't, then we'd be looking for this continue to move down and possibly work toward filling this gap and eventually get down to this 325.62 level. But if it could find a support up above this 343.28, then we'd be looking for a upside move toward the upper range between 347.70 and 346.40. Then we'd be looking for potential resistance at this 348.54, then possibly at 350.27, if it could break about this 348.54. And despite the ETF for the S&P 500, we also see there is a bearish candle last Friday. So right now it is testing this 439 level here. And if we could hold above this 439 level, then we look for an upside move to come up to this upper range between 444.80 and 443.60. And if we break through that, then we'd be watching for this potential resistance up here at 450.34. Now, if it fails to hold this 439, then we'll be looking for this thing to come down to the lower range. That would be between 435.50 and 435.30. And if it breaks this lower range and also this level here at 435.48, then we'll be watching a move come back down to this small balance area between 429.60 and 426.14. Now, looking at this QQQ, the ETF for the NASDAQ 100, we see that on Friday finished with a bearish candle and sitting right near this 367.88. So if it could hold above this 367.88, then look for a move, come up to this 372.82, take out last week's high, and then tag the upper range between 376.70 and 374.30. If you can move to that, then watch these 378.90 as potential resistance. And if it could break through that, then the next level to keep an eye on would be up here at 389.63. Now, if it doesn't hold this 367.88 support area, then look for a move back down toward this lower range. That would be between 361.60 and 360. Then watch this 357.48 support level here. And if it doesn't hold support here, then we'd be watching for it to come down possibly to this 338.50 area. And finally, for the Russell 2000 ETF, the IWM, we are watching this level here at 184.60. So if it could hold about this 184.60, then watch for a move back up toward this 189.92, which is also in confluence with the upper range of the weekly expected move, which is between 190.80 and 189.50. Then if you could move to this 191.49 potential resistance, then watch for the next level up at the 195.39. Now, if it doesn't hold the support level at 184.60 area, then look for the lower range of the expected move to possibly get tagged, and that is between 182.40 and 181.80. So if it take this out and move below this lower range, then we could see the Russell 2000 ETF IWM could make a move toward this 178.88. In summary, the market internals are showing some bullish bias, and the market participants are risk on. But in the near term, the market is a bit extended, and the price action is starting to show some sign of a possible pullback. Whether this pullback is just a small pullback setting up for the next upside move, or this pullback is a beginning of a wipeout of the recent euphoria, only time will tell. So be sure to check out my Substack page for more content throughout the week, and don't forget to smash the thumbs up to give it a like and post a comment to help promote this video on YouTube. If you are new to this channel, be sure to click the subscribe if you'd like to continue to watch these videos from me. Thank you for watching and stay safe.